Hey everyone, this is Mr. Anderson, and I thought I'd do a quick video on today's price action and macro news events. Starting out here, we're looking at the Bitcoin US dollar index on the 1 month chart, and we are in the process of printing a 7 on the Tom DeMark indicator for this month. There is approximately 5 days left in this month. And the good news is that this is not a bearish engulfing candle. We did wick down pretty far. But overall, I think we are still in a bull run and we are consolidating. One of the things that have been mentioned in the crypto circles is that we've had previous 7 months of green candles. And that's only happened once before on the chart. I'm not exactly sure where or if it's included in this index chart, but we were due for a pullback. So I think we're in the middle of a consolidation period. And overall, we are also testing the previous cycle high, which was this first peak here back in April of 2021, and we are testing it as support. So far, I think we are doing well on the monthly chart. Looking at the daily, we are in a period of consolidation. Now we are below the I believe that is the 20-day standard moving average. Yep, 20-day. And we are also below the 50. We also got the 100 and the 200-day moving average. The last time that we were below the 50-day was back on 15th of January of this year. And we did dip down towards the 100-day before we started basically a parabolic trend up to the new high at $73,000 and 899 price point. So I think it would be natural for us to retest the 100-day. And so we probably have a few more weeks of consolidation. Now, I will pull up auto charts. And as you can see, we have several patterns in here. I think the bull flag is the strongest pattern here. We do have a double top, which I think is basically a weak pattern or a weakly identified pattern. But it does have a price target down to the 200-day moving average. I think we could probably touch that and still be in a bull run, but it would definitely weaken the chart severely, and I don't think we're ever going to go down there. We also had a rising wedge, which actually did play out. And when these patterns are identified by auto charts, these price targets are either the best case or the worst case scenario. We don't necessarily have to reach those targets, especially on the larger time frames. And as Bitcoin matures, I don't think this is going to matter as much with this volatility. But it is something that I think is easy to identify and something you can work off later on with your TA. That's just the way I like to do it. And sometimes these do play out very well. So again, I think we're just consolidating here. And I think with ETF buying pressure and especially with the Hong Kong ETF that's coming in, that's slowly going to build money at this level. And I think we'll eventually start to go up. And a lot of this is going to have to do, I think, with the macroeconomic cycle that we have been encountering since 2008 with a lot of central bank intervention. So obviously, today we got our GDP growth, which slowed to 1.6% in the first quarter, which is well below expectations. And the expectation was, or the estimate was 2.4%. So we're almost a 1% or 100 basis points below what was expected. So actually 80% or 80 basis points. That's a big deal. And I think this has been a long time coming. I think a lot of the public numbers that we've been receiving on the face value seem very well, but if you dig into the data, which actually is all free and actually is given to you by our central banks, you can actually go to the St. Louis Fed website and it has all of this data that you can look at. The actual, below the surface, or if you actually open the book and actually look at the numbers, are not as good as they seem to be. And I think especially that was with the labor numbers, the employment numbers, or the number of jobs created were not as good as they actually seem. A lot of those get revised lower. Actually, a few were actually revised, and they created more jobs. But for last quarter, for the first quarter, all the jobs were part-time, and we actually lost a lot of full-time jobs. So no full-time jobs were created and a lot of part-time jobs were created. And that's not the sign of a strong economy. Now looking at the 4 hour, we got a jumble of patterns. The latest one is a inverse head and shoulders. And just prior to that, we had a descending wedge or a falling wedge, and that actually played out and it made about 2/3 of its way to its price target until it created a rather ugly inverse head and shoulders. Now again, I don't know if this is really going to play out. It's a very ugly pattern, but it is in the right direction for the trend, which is up and to the right. And as of right now, it's bullish. Actually, I do want to go over this right here. So we did have some bullish divergence. I get that in yellow. For the RSI. And looking at this a little deeper, we had one hit, another hit against the trend, and then we broke out yesterday, or the day before yesterday, and it looked like we were going to break out of this trend and get above the 50 mark here on the RSI. But we got punked with the GDP numbers and we dived below it. And now we're retesting this trend line as resistance. So that's just something to be aware of. I'm not sure where it's going to go with that. But we can also look at the stochastics. And the MFI and see what that's given us. As you can see, the Stoch is also on a downtrend. We're popping above this trend a little bit, and then we keep getting pushed down, and that could probably have its own little trend line there. And we have the MFI. Let's see, I'll make that blue. And we'll make that green. So looking at the Stoch, the trend is down on the daily. It looks like we are set to revert back down. And if you look at the green MFI line, that has been trending down as well. We did pop out of it. And then we are testing it as resistance, but we're still below the 50 mark. We'll take a look at the market cipher in a second. And looks like we got a MACD-FU. So it looks like we had a parabolic rise that brought us up to the creation of this bull flag. And then we consolidated, and it has been dropping precipitously. So we got rejected here. We're going to have basically an MACD-FU, another MACD-FU. And with the GDP numbers, we're having another MACD-FU, as CryptoCache likes to say. So, and on another point, Rexar had mentioned, I think we've had over 40 days of the MACD or the MACD in the red. I did look at the chart to see if there was any other, at least for this cycle, the beginning of the cycle, 40 bars or 40 days of the MACD or the MACD in red. And I think the only one I found was one that was like 39 days. So I think we are due for a reprieve to the upside. And I think with the GDP numbers, I think the market needs to digest those numbers in accordance with some other important data. But I think we're going to revert back to potentially having an earlier rate cut instead of one late or in early 2025, and maybe potentially more. And the reason why I think that is because the Fed is trying to reduce inflation by breaking the economy. And what I mean by that is they go off what is called the Phillips curve. And basically what that idea means is that you need to increase unemployment to reduce inflation. And there's a lot to go into that. And if you have questions about the Phillips curve, feel free to let me know and I'll make a video on it. But that is what the Fed is trying to do. And they're in competition with the United States government or the Treasury and the Democrats' policies, which is dumping money back into the system through their programs. And that's really what is going on here. Powell has mentioned that in his speeches that we are not fiscally sound, or the U.S. government is not, and that is a problem. Now, with that, they are going to potentially overreach in their own policy as the Fed, and they're going to break the economy, and they're going to have to do emergency measures, probably involving early rate cuts, more than one rate cut, and potentially going to quantitative easing. So as far as crypto is concerned, I think that's a good thing. We may dump because the market's afraid of the not knowing what's going to happen. Especially with the traditional markets and the economy. But once we start dumping a bunch of free money back into the system, a lot of it's going to find its way into crypto. All right, so back to the 4-hour. Then turn auto charts off. As you can see, we did dump below. This is the most recent trend, and that trend is up on the 4-hour. And we did dump below this parallel channel, and we wicked up back basically into it. We're barely into it. We're either testing that as resistance, or we're going to pop up above it, and that's going to be support again. But if that breaks, we're probably going to come back to the lower end of what is the bull flag, which I'll highlight here. So we're starting to get away from that. As this consolidation increases, the amount of points to the upside and to the downside are going to matter more, because maybe this is not a bull flag, or the pattern's not going to play out the way it needs to. The potential energy is not going to shoot it to the upside, and it may just consolidate and break apart and become a rectangle or some other pattern. But at the beginning of this bull flag, it starts back on the 13th of March. We've had 1 and 2 and 3 tests of the lower boundary and only 1 of the upper boundary. And going off of CryptoCachet's analysis, I think the more time you hit a resistance or support level, the more likely you are to break through it. So coming back down to retest the lower boundary would not be a really good situation, especially in lieu of not retesting the upper boundary. So that is something to think about. I expect if we do come down a little bit lower, it'll be around to the mid 59,000 range. And if we break that, there is very little support at the 57 range. And more than likely, we'll come back down to the 52K range. We can look at the hourly here. And here's where we like to use the Ichimoku. Right now, we are testing the cloud as resistance. But the lagging span is within the price action. If you were short, I'm sure CryptoCache would say this is probably somewhere where you would want to basically take profit down here if you weren't a short. Now the price action or the lagging span is within the price action. And we get some better detail on whether we are in that parallel channel, and we are not. And it looks like it was resistance. So we're probably going to come back down to the 63K level. And if that doesn't hold, we're going to come back down to the lower 60s, 60, 61K. And I think I'll put a block here. So I can show where that price action is. So we may come back down around here, bounce off of this area of support, and we could go and launch back through that Ichimoku cloud and test it as support again, and then continue our trend. But it really all depends on the macroeconomic news. Now, one of the other things that is important for tomorrow is that we're going to get the PCE numbers. And we'll take a look here. All right, so tomorrow is the PCE inflation report. And it's going to probably determine where the Fed goes from here. So CPI inflation is up for 2 straight months and has been above expectations for 4 months. PPI inflation is also up for 2 straight months and above expectations, all while GDP came in weaker than expected and the PCE price index increased more than expected. So these are some prime indications of stagflation. And as you can see here with this chart, it's short of, you can see this chart in several, in a bunch of locations now. It's kind of the making the rounds because the inflation is mimicking the price or the action of the 1970s. I don't think we're really in the 1970s as far as the macroeconomic situation. However, I think the reaction from the Fed and monetary and fiscal policies are going to create another bout of inflation. And again, that has to do with the breaking of the economy, at the slowdown, which we have a huge indicator of today, and a rise in inflation. So that is what I have for you right now. I'm just kind of testing this out and seeing how I can provide and the group with some alpha and improve my skills in the process. So if you have something that you're interested in and you want me to talk about, let me know, and I'll see you in the charts and in the Discord chat. Thanks. Bye.